Welcome to this video, which is on Sunday, March the 26th. And what we're going to be looking at today is some chart setups and using big technical support and resistance levels backed up by the CFTC Net Traders report. Now, in last week's video, we covered the GBP USD. That moved up really nicely for us. We've now banked out of that trade and taken our profit. We also looked at GBP AUD long. Triggered long in this pair. We think there's far more upside to come, so I'll be updating it in a moment. USD JPY short, again that moved nicely in our favour to the downside. I'm going to be updating the pair as well, where I think good risk reward entries are. Also want to look at two new pairs this week, AUD USD from a short perspective, and also a minor pair which I think has got fantastic profit potential, which is USD MXN long. Now I know you do obviously pay a wider pip spread, but I think with the profit potential in this pair, it's well worth a small position. So we'll look at the USD MXN as well. Now, just very quickly for new viewers to our videos, if you're unfamiliar with the CFTC Net Traders, there's a video link under this one where you can learn more about them. We consider CFTC Net Traders report the most valuable tool in Forex trading. Now, just very briefly before we go and look at the charts, what I'll just say for new viewers is we always want to be trading with the smart money commercials when they go against non-commercial big speculators like managed funds. It's one of our favourite ways of trading, and you'll see how effective it can be as we go through the chart. So let's start with our first chart, which is going to be AUD USD, and then after we've done all the charts, just come back and sum up with a few additional points. Of AUD USD, and we're just going to be looking at how the CFTC Net Traders are shaping up, and basically we've got three lines at the bottom. Green line is basically the non-commercials or large speculative funds. The blue line represents the smart money commercials. Red line, small speculators. Now we don't need to pay any attention to the red line at all. It's insignificant for our purposes. We want to see what the smart money commercials are doing against the speculators. Now, if we go to the right of the chart, we can see that this week the commercials have sold heavily short. They're the most short they've been since September. Non-commercials still maintaining a big long position. Now, if we look at the commercials, they were very short here. You can see where the cursor is. And if we look up, that's just above the 76 level when we come to test 77. We were saying last week, we thought, the commercials, they see, when the Aussie goes above 76, and they have done for the last year, towards 77, they will come in and sell hard. They lightened up into the 75 level, but now they've gone short again. Now, our last trade in AUD USD, we shorted up into the 77 level. We got some profit down towards 75, but it wasn't a major profit really. And now we've sold again with the commercials. Now, I just want to shift to another chart and show you how we're playing this trade. AUD USD daily again. I'm just going to show you how we're playing this trade. Now, in terms of resistance, I'm going to put it there, which is about 77.40. Okay. Now, in terms of what I was just saying, I'm just going to stress it a little bit. But once we get above 76, towards 77 for the last year, the commercials are going to come in short. And we can just look to sell weakness. So on our last trade, if you saw our video, we came in and sold through 76.50. We did see a decent decline down to 75. We elected to take out half our trade and then tighten our stop up on the other half. Now, it's an okay profit, but we're looking for this one to be a better profit. Now, in terms of the rally up here, the commercials, they're going to sell hard, so we can come in short again. Now, before I talk about how we're playing the short side, just want to do my first target, which is 75. Okay, now double topped. Once we get up towards 77 level, just from a personal perspective here, we would come in early and just sell. Yeah, this is just from our experience of the CFTCs, and then cover some out as we come off the level. Our main position, though, comes in through 76.50. So, yeah, we're just basically beneath where we sold it, but not by much. I think in terms of resistance, yeah, we've got resistance at Thursday's candle here. Might get a bit hard towards 77. But from our perspective now, we're at the 20-day, trying to hold it. Breaks through it, we're going to come to 75. And then I think we're going to be going down to, sorry, I want to be here. My apologies. I want to be at 73.50 for my second target. So from our perspective, I think, we're in at, through the 76.50 level. If we get to 73.50, be happy. Rallies for us are definite selling opportunities. And, we'll just see how we go with this one. But, in terms of the Aussie, I put 73.50. But, from my sort of reading of the fundamentals, which I'll update in the weekly forecast tomorrow, I think we're going down to 70 or lower. So for us, we'll see how this one goes. And hopefully it turns into a good profit. So let's move on to the next chart. The chart now of GBP AUD, which was the setup we looked at in last week's video. Now, before I do some levels, just want to look at the CFTC net traders in terms of how the commercials and non-commercial speculators line up. Now, you don't get GBP AUD on the CFTC net traders. You have to work it out for yourself by doing AUD against the USD, then go GBP against USD. But it's easy to work out the ratios. And you can see commercials 7 to 1 in favour of longs over shorts. They've got 7 times as many longs as short positions. Speculators, non-commercials, the other way round. They've got 6 times as many shorts as longs, and both groups added this week. So we know we've got good divergence between the smart money and the speculators. So we, like we were saying last week, we wanted to be long, and it was on this candle here, which I'm highlighting, which just touched the 20-day moving average. And we were saying what we liked about the setup last week was that we'd had quite a few touches of the 20-day moving average with no decisive breaks. So you got the touch here, another one, another one, another one. This one just gets above but fails. Then this one touches, this one fails, this one fails, this one fails. Now, when the commercials and speculators have diverged so much and volatility also has dropped, we're just waiting for a break of the 20-day moving average. Let me change that to black. So basically, you see us come down a little bit here. Then this big blue candle takes out the 20-day moving average. Now, this one doesn't follow through. However, knowing the CFTC net traders, the way they're positioned, we are pretty confident we're going to push on to the upside. That's exactly what we do on this blue candle. Now we're pausing on this red candle. Now, from our perspective, we came in through 161.45. We move up to 164. So it's a nice profit. Now, of course, short term, you can get a pullback. Where will the pullback come to? I got a feeling it'd be around here. So about 163.40. Now, in terms of, you've got a good profit in this trade, let's say. I know I say it in near enough all my videos that I'm doing charts, is you can always just take 50% of your profit or trade off the table, bank in a good number of pips, leave the other half run, which you can do. You can come back in on pullback if you wish, or on a break, a clear break of this candle here. Now, we see more upside in this pair. And the first level I think that we should target is going to be the 167 level, but I'm really looking for us up towards the 170 level. So this trade so far, it's a really good profit, but I think we could get plenty more out of this one. I mean, we shall see, but it's so far so good. Let's move to the next chart. At the Japanese yen against the USD on the CFTC net traders, and I said it last week, but for anyone new, on the CFTC net traders report, it's always the foreign currency first. So we've got the Japanese yen USD. Of course, we're trading USD JPY. Now, in terms of the commercials, what they did was they increased their long yen positions, okay, into this 87.50 level, which is equating to 115 in USD JPY. We'll go to the USD JPY chart in a moment. And obviously we saw the yen go up and the dollar go down. What we're noting this week, though, is we are seeing the commercials just ease out of some of their long yen positions, but they still remain heavily bullish of the yen and bearish of the dollar. In terms of the speculators down here, not much change this week. They still remain very bearish of the yen and bullish of the dollar. So that'll move down in the commercials here after, the yen has gone up on the USD, indicates a little bit of a correction for us. So now what I'll do is I'll just switch to the USD JPY chart and do some levels so you can see where we think this pair is going. USD JPY daily, I'm just going to draw in the level of resistance that the commercials were selling into, as we noted when we just looked at the positions, up into the 115 level while the specs are buying. This red candle here gives us our selling opportunity. It gets through the level, comes back, settles near the low. So we're going to go short at 114.65. Blue candle tries to take it out or take the 115 level out. It can't. This red tail just gets above the fails. Then this candle fails through a 20-day moving average. And now this candle here goes through 113. This is when we did our last video. And we were saying we thought we would go down to our initial target, which is 112, and break it. Now we have broken it. We come through 112, but now we're finding a little bit of support. So just back above the 111 level on Friday. And you've got quite a firmish close. You've also got momentum a little bit oversold down the bottom. Stochastics turning up for oversold. RSI's turning up. Now you got a decent fall from 114.60. Well, from 115 really to 111. And the commercials have just taken some of their shorts off the table. They still remain heavily short, and from our perspective, that just means they expect to bounce. They're not. Their positions are not indicating there's going to be a trend change. So from the way the chart looks, we're going to get a bounce. What we've done, which we do all the time, which I keep saying, is that 50% comes out into 111.20. So we've got the option of putting it in again if we do break lower. But if we rally, we can get back in at a better price. But how far can we rally? Well, my own view is this level here, it's the breakout point, isn't it? Which is just below 112, about 111.90. I think we should get to this level. If we get above it and above 112, then it's this level here. This is the level I think could be targeted, okay? Top of that candle, open and close on that one, bottom of that candle. So, we look a little bit oversold. I think we could get above 112, go up to 112.70. So we'll just see if the rally does unfold, and obviously we're going to go and try and sell it. If we break to new lows, we've got the option of coming in through the low of Friday. Now, once oversold is corrected, I think we'll be going down to 106. But just before I forget, where's the stop? Behind the 20-day moving average for us. So if I do that, this is the level we think the rally will fade into for sure. And then the stop back behind 113, the 20-day. And then, like I said, I think we're going down towards this 106 level here, which will be a retracement of the entire Trump rally, really. So once oversold was correct, I think there's plenty of downside. We could, of course, break lower, but we can do whichever, sell the rally or sell the break lower. But I still think there's significant downside left in this pair, so we'll see what happens. On the USD MXN daily chart, before I look at the chart action and what I think is going to happen, I just want to draw your attention to the quote that I've put up on the left of the chart, which came from Reuters on Saturday. And it says currency speculators decreased the number of net short bets against the peso to the lowest since a week before the US presidential election. Speculators and investors have taken note of the peso's turnaround. UBS, that's the big bank, on Friday released a note to clients saying that they've moved to an overweight position in the peso. So basically they're selling the USD against the peso. And I saw another note, I think it was on Market Watch, where it said that Goldman Sachs were now recommending clients sell the USD and buy the peso. Now, in terms of the speculators, obviously we're always looking for them to be wrong. And if we look at the chart, okay, I've drawn a channel which is distribution, where prices try and get higher, then they break nicely into a downtrend. Now, when we had the period of distribution, the commercials were 7-to-1 in terms of their ratio of shorts over longs. Speculators, actually, sorry, I've spelt it wrong, held the opposite view. They thought the USD was going up, holding 6 times as many longs over shorts. Of course, it breaks lower. Now, what has actually happened is speculators have got hit hard in terms of the decline in the USD. And what happens into the 19 level? Okay, speculators are now almost even in terms of longs and shorts. Sorry, commercials who've basically short the USD all the way down have now moved to a long USD position. Now I know, from reading the MXN CFTC data over the years, that when the commercials turn around after having such a big short position, they are basically going to be adding to it now. Okay. Now, in terms of this, it isn't an extreme now, okay, but the commercials moving along the USD, and of course all this talk of the USD is going to continue down against the peso, and all these big banks and wise funds coming in the other way. I like the look of the long side of USD MXN from a technical perspective, and we know the commercials just going to keep buying now. So what I've done is I've drawn a level 1860, which I think is going to be good support. You can see where the Trump rally breaks out above this red candle. This one here, basically fills that gap and goes to the upside. So I think this should provide good support. And now I'm looking, for any strength at all to get long the peso. And I think if we do that, come in above the 1900 level, and the stop can be behind the 1860 level. I think probably be about 1850 for us, something like that. Now, for us, a good level to target will be 2020, although I do think we could go back up to 2100 easily. So from our perspective, if we break higher, we will want to basically go long, okay? If we come down to this 1860 level, I want to see how we perform. If we go through it, I'd look to buy back through the level, okay? So basically on strength, I want to pick up the USD long against the peso. We know now that the speculators are coming in heavy to sell USD MXN, and the commercials now, they're moving in to buy, and they will continue buying. So from a technical perspective, I think this looks a decent chart. And the way the commercials are moving against the speculators here, I just feel we are going to get a really good move to the upside in the USD. We get above that 19 level decisively, I think we'll soon go to 2020. We'll see how this one pans out. So that's my view of USD MXN. Welcome back after that short summary there of a few chart setups. Now, in relation to my view, that is as it is right now. Of course, it can change in line with the market conditions. If you want our daily technical analysis, major Forex pairs, you can simply click on the link beneath this video. The odd pair out in the ones that we just looked at was obviously the USD MXN. Although the groups are almost even, you could tell, just from that quote I did from Reuters, that the speculators now think it's a great idea with the large funds to sell the USD MXN. Mentioned two big institutions. There's many more actually who favour this trade now, despite the fact that obviously they lost a lot of money when the USD fell on the MXN, and now they're going to reverse. And they're doing it exactly the same time as the commercials have decided to drop their short position and start buying. And I think, from my past reading of the report, the actual commercial buying of the USD is going to be quite aggressive here. Sure, it can run on a little bit more to the downside. We're going to try and obviously pick it up on strength. If it falls a bit, we'll just lower our entry. And one thing I also find rather bemusing actually is, like, on Reuters every week they talk about what the speculators are doing in the market, like they're the smart money. They never ever mention the commercials. It's obviously the commercials who are really good at turning points and assessing fair value, but they never get a mention. It's not just on Reuters, it's on any of the big news wires that talk about the CFTC net traders. Historically though, it's the commercials who normally come out on top. Now, in relation to it's just a general point really, I'm sure I've made it in previous weeks, but I'm going to make it again anyway because I feel it's important. I think once you have a decent profit, you should always bank half. Now, what's a decent profit? Well, it depends on each individual. But I always think if I get above 150 pips, 250 pips, like in that GBP AUD one, I want to get some money off the table. Get some in the bank. You've got the option to put it back in. You're still in if things run on. You smooth your equity curve. You can, most of the time, if you get a decent enough profit, ensure you're going to come out with something overall on your trade, or you dramatically reduce your risk. So I always like to kind of play great defence first. Never want to fall too far behind in Forex, and have a smooth equity curve. I always think doing 50-50 trades helps achieve that. Now, in relation to the trades we've just looked at, I will come back and look at them again next week. Also, tomorrow I'll do our usual forecast, going through all the big fundamentals that are driving the charts as well. But that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.